Cashflow Pro offers free money management advice to help you take control of your finances. And now here's your host, personal finance enthusiast and licensed insurance broker, James Barber.
Good evening, everybody. Welcome to Oregon Cashflow Pro. My name is James Barber. I'm here to help you maximize your cash flow. This is our Wealthcare Wednesday live stream. If you've got questions, I'm going to do my best to answer them. Put them in the chat. I do have a message machine on my website. So if you go to the website, OregonCashflowPro.com, you can click a button and leave a voicemail message that it won't play at this Wealthcare Wednesday, but I'll most likely play it at next Wednesdays. So if you've got a question and you want it said in your own voice, easier than typing it out sometimes, go ahead and put that in over there. I would love to answer it. But otherwise, how's everybody doing this evening? Can you hear me? We've got a few viewers out here, but I don't know if my sound's working just yet. So let me know if you can hear me. It looks like my sound is working. So this is our Wealthcare Wednesday live stream. If you've got questions about dynamic banking, infinite banking, life insurance, whole life IULs, credit cards, credit score, maximizing your cash flow, we're here to help. I am not sure if this thing is working yet. Hey, BDN, how are you doing? There we go, loud and clear. Thanks. How is your day doing? You got out of GameStop just in time today, right? It was a pretty interesting day in the market. Daniel, how you doing? Thank you. Appreciate that. Always nice to know people are out there. I did not. So I ended up with GameStop. I had a couple of plays going on. Going into this morning, I had two spreads. I had a 170 to 175 spread, which I closed out for about an 80% gain. And I had a 180 to 235 spread that I closed out for about an 80% gain. I bought it at 2,900, closed it out for 4,900. Max gain would have been 5,500. But had I held on to that, I would still be holding on to it because there was a big drop right at 12.18 today where the shorts attacked and somebody just sold out massive amount of shares in a very short period of time and really pushed the share price down. So fortunately, I had gotten out of both of those options before that happened. Unfortunately, I bought back in with some shares, and I did not get them sold. I was actually going to sell them right at 345 before that drop happened. And I didn't put the trade in, and the drop hit. And so I ended up giving back the $2,000 that I had won on my spread. So kind of funny. Daniel, you're busy building an MVP for your business. You don't do stocks yet. No time to study it yet. All right, well, it's definitely best not to jump into it without learning what you're doing. That's for sure. Now, what's the MVP? Is that a business plan, type of business plan? I'm not familiar with the acronym. Deep in the money, how you doing? So what's the MVP acronym? Help me out here. How'd your day end up? Deep in the money? Well, while we're waiting on that, minimum viable product. Oh, okay, cool. Minimum viable product. I'll share one of my trades with you that I put on later today. So I'm currently sitting on a few GameStop options. One of them is a calendar spread. This is the first time I'm trying a calendar spread. And let's see, hang on, let me find it. Oh, no, wait. It's not a calendar spread. It's like a calendar spread. I did some calendar spreads with AMC. But with GameStop, I ended up putting in earnings is on the 23rd. So options prices are elevated currently. If you look at the option strike prices, going from the 12th to the 19th to the 25th, or the 26th, and then the 1st. There's a big jump up between the 19th and the 26th. And that's because on the 23rd is earnings. So your options prices are going to be elevated. The IV is going to be higher on that day. The options day expiring right after that. So what I did was I bought a 420 call. These option prices are all crazy high. So I bought the 420 call, $6,400. I sold, and that's on the 1st. I sold the 490 call, which is the highest strike price available. I sold the 490 on the 26th, which is earnings day. And the reason I wanted to sell the one on earnings day is because as soon as earnings happens, all of those are going to drop. The IV is going to drop. We're going to have what's called IV crush. And the options prices are all going to go down. But the difference, the price difference between the one that I bought and the one that I sold, it should expand, because the one that I sold should drop a lot faster than the one that I bought. Now they're both going to lose value at close to the same rate between now and then. So I bought the 420, sold the 490. So I gave myself $70 spread between the two. So if GameStop shoots up and it ends up above 490, it's a $7,000 payday, which, because I bought the one and sold the other, it only cost me $1,600 to get into it. So I could potentially get 4 times my money. So I could win 4 times that if it goes over 490. That isn't the play that I did it for. I mean, it'd be great if that happens. But if it doesn't happen, if it just stays up anywhere in the couple $100 range through earnings, those will both drop in value, and I still have a week for it to go back up. But I should be able to sell it as soon as earnings happens. I should be able to sell both of those and make a profit. And that's basically how a calendar spread works, but in this case I did different strike prices as well. So let's see. Decent day? Good. Oliver, feels like it's been a while. What do I think of the market so far? The market's been rough. It's been a rough couple weeks, but this week has been good. We finally got some reprieve from the 3 weeks of red, and we got some good green. So we're working on making some comebacks here. And I've got some good options out there. Daniel, MVP meaning, your minimum viable product, meaning a product at its infancy that you can sell as a product serial, number 101, of a business you want to build. Could be a service or a product, i.e. an app if you're a software company. Yeah, right on. Chris Birch, how you doing? What's your long-term projection on Tesla? As you are both Tesla guys. Oh, we're both Tesla guys, but did Bitcoin purchase hurt them? And 2, are the production numbers more to blame? Okay, long-term projection on Tesla is bullish. It's definitely bullish. And we've got a lot of catalysts coming up. Did the Bitcoin purchase hurt them? A little bit. It did hurt them a little bit. It didn't hurt them from a value standpoint. But where it hurt them was in traditional conservative investors, big investment firms. It represents an additional level of risk that, frankly, they just aren't comfortable with. It makes them uncomfortable. They don't want the option of seeing a loss on the books because of Bitcoin's volatility if that happens. And a gain on the books from Bitcoin doesn't really matter. It doesn't affect the underlying operation of the business. So it's not like if you report, let's say Tesla bought and sold their Bitcoin and made $1 billion on it, because they're currently up over $1 billion on their Bitcoin purchase. Let's say they sold it, put that into the books, they got to claim an extra $1 billion in revenue this quarter. It doesn't matter. It doesn't matter at all, because it doesn't translate into future earnings. You can't take that and say, okay, they're going to be able to do this every quarter. So it's not going to increase their share price in the future, which is where Tesla's share price is built on. It's not going to help that share price in the future. So it can hurt you because of the instability and just people not wanting to buy Tesla to get any action on Bitcoin. So it can hurt you in that regard, and it doesn't really help you to make money on it. Now, where I do like it is they could take that big purchase and turn it into their ability to do transactions with customers on Bitcoin. So they can actually sell vehicles now with Bitcoin and not have to transfer it to dollars and then back to Bitcoin or whatnot. You know, there's costs involved when you do exchanges that way. So they're able to take that, I imagine, and offer the ability to just do transactions on Bitcoin. I think that's a good thing. I think moving forward, that might give them the opportunity. It might give them an opportunity that not a lot of other places have, that currently no other auto manufacturers have. So that could help in the future. Now, as far as the major drop in price, I don't think that really had a whole lot to do with Bitcoin. A lot of what that had to do with was the January production numbers were down. The February numbers looked good. So we saw that come back up. But when earnings came out, earnings were not good. Earnings were not up. They weren't what was expected. And they didn't give us any guidance that would lead to an increase in the price. And so that, coupled with the Bitcoin purchase, stock price went down. A lot of people questioning or just happy with the gains that they had made previously, want to lock those in. There's other things going on in the market. It wasn't just that, but Tesla took an extra heavy hit that the rest of the market didn't. Rest of the tech sector didn't. Now, we're going back up. And that massive rise came the same day that they released the delivery numbers in China for February. And the numbers were great. They met expectations. But even better than that is it met expectations while all of the biggest competitors, the Chinese EV market, the Chinese EV makers, all underperformed in February. All of them underperformed on deliveries in February. So that can often be attributed to the Chinese New Year. But Tesla's numbers all hit. So Tesla's showing that most likely all of those down numbers was because of Tesla. Tesla taking some market share. The dropping of their price was effective in keeping the numbers up despite all the other carriers' numbers going down. So we saw the biggest growth that Tesla's ever had in one day. Now we also have Elon putting out a button that all the full self-drive owners are going to be able to push to download the latest full self-drive beta as soon as next Friday. And hopefully next Friday, but maybe into the week after. That's incredible, and that's really bullish. Because when full self-drive hits the masses and people realize how much this thing can do, bye-bye. Bye-bye stock price. It's going to go up. Not only will that help earnings immediately, because they'll be able to claim more of the percentage of all the full self-driving that they've been selling, but people are going to start to understand what it could mean, what that can mean in the future, how close we get to full self-driving level 5. This is not level 5. Full self-drive beta is not level 5, but it is city streets, and people are doing really long trips without having to touch, without having to have, what do they call it? It's an interaction. I forget what they call it, but where they have to take over, where the driver has to take over. So that's going to be amazing. I'm really excited for that. That's why I bought the full self-driving on my Tesla. It was because I want to be able to do that. I want to be able to do videos on it and share those on YouTube. And you can bet there's a lot of people that are going to be doing that. So the exposure that's going to be happening is going to be huge. So I expect that to be a major catalyst coming up. And I think a lot of other people will too. And then we've got ARK Invest's new price targets are going to be coming out soon. Most likely by next week. If it doesn't come out this week, most likely by next week. Maybe they push it back a little bit to see how the full self-drive rollout happens. If I were them, I probably would at this point. There's no reason to put out projections this week only to have to redo them next week because of the full self-driving rollout. That most likely their current projections are going to have a bunch of steps listed in it. If they do this, this price. If they do this, this price. Because it's one of the biggest factors in their projections. So that's my expectation. We'll see. See what happens. Northwest Pearl, how you doing, man? Deep in the money. What's your opinion on ETFs and mutual funds? You've grown your nest egg slowly. Want to move some money into something that you can forget for a couple of years instead of just sitting in a bank account. Those can be a good way to do it. ETFs, there's some really low fund ones out there that are well managed. I don't have any issues with that. You can get a Vanguard or a Fidelity fund that has almost no fees, and it can grow along with the S&P 500 or the whole market, and you can probably get 8 to 10% return would be my guess. So not a big deal, and that's something you can kind of set and forget. You do still have the risk of downside because those can crash, but as long as you got time for them to come back up, I got no issue with that. There are some other ways to approach investing in that is really safe, but you can get better returns using options. But that's something that's like you got to have the time to learn it so that you can put it into practice. So if you just and there are things you can do like that you can set it and forget it. But what you described with the ETFs is one of the safest ways. That's one of the safest ways to do it. So I don't have any issues with that. The other thing you can consider is what I do. I sell high cash value life insurance policies. One of those matches that strategy fairly well, and that's an IUL, Index Universal Life Policy. The Index Universal Life Policy, you fund it, you get downside protection, meaning if the market goes down, you get a zero. Your money, it does not go down with the market. But when the market goes up, you get to take advantage of it going up. Oftentimes there's caps or participation rates. So your upside is limited, and because that upside gets limited, like that's what they do to give you that downside protection. They can't just give you all of the upside for anything at no cost. There's definitely a cost to it, and that cost is your upside is capped. But if the S&P, let's say the S&P goes down 50%, you don't have to wait for it to go up 100% like you would if you owned the actual stock or shares. You wouldn't have to wait for it to go up 100% before your account starts to get back in the positive. The way the IUL works, it goes down, market goes down 50%, you stay even, and as soon as it starts to go back up, you get to go up with it. So it works really good. It's a great, safe way to grow your nest egg and not have to think about it, not have to worry about it. So if you're interested in that at all, feel free to sign up for a meeting with me. I can talk to you about how that might work. I would highly encourage you to watch some of my other videos. on that, on the IULs, so you can understand what I'm talking about. I posted a link in the chat to sign up for a meeting with me, so if anyone's interested in a one-on-one consultation, there's a whole bunch of choices in there, from just a free 20-minute one-on-one consultation, which I offer to anybody. If you want to talk life insurance, or you have a life insurance application that you want to do, you can sign up for that option. We've got an actual paid consultation that's available. You could do 30 minutes for $30. And then I have an options education one that's a $60 choice. So there's a few different ones to choose from. Pick whichever one works best for you. I'd love to chat with any of you guys. If you've got some specific questions, things that really needs a one-on-one in order to get answered. So, yeah, you're welcome, Deep in the Money. Daniel, you seen news today that Tesla's exporting 25,000 Tesla vehicles from China. Plus, Giga Berlin getting closer to completion. Tesla, in your opinion, will grow and grow from here. Elon is such a smart guy. I agree. I agree. Anthony Thomas, good evening. Alex, good evening. How are you doing? Alex, is that the same Alex that was you bought the UWMC the other day at the high price? I remember it was an Alex, but I don't remember the last name. That was you. Okay, do you still have it? What did you do with it? Because I forgot to tell you when we had talked about it. One of the reasons we were... You're still holding. Okay, good, good. One of the reasons we were bullish on that to begin with was the 21st of this month, that stock, that company is being included in the Russell 1000. And so you're going to see a lot of institutions that have to buy the shares. So the stock price should go up between now and then. It should go up to account for that. So you're going to get the dividend. You're going to get the dividend. And then we're going to watch and see March 21st. Most likely they will have to have their shares. They'll probably buy them that Friday before. So on the 19th. So keep an eye out on Friday the 19th. That might be when it peaks, as all those institutions add it to their portfolio. Yeah. Yeah, potential good news. So you may take this opportunity. If it drops, average in. You know, buy some at that low. That way when it goes up, you got a lower point that it has to reach for you to make money. But all those ones that you buy low are going to make money when it goes up. So that's what I'm doing. That's what I'm doing. So it's something for you to consider. I can't tell you what to do. I'm not licensed to do that. But that's what I'm doing with it. I ended up picking up... What did I do with it? I had sold most of my shares, but well, I sold most of my shares in one account, but in my other account, I just added to it, and I'm still looking for a dip. I'm going to add more to it. So, yeah, you got time to hold, but it's kind of sucks to be holding and seeing it negative all the time. So one of the best things you can do is to average in, you know, average down. You just dollar cost average. So when the price is low, you continue to buy. You buy in high, no big deal. As it goes down, you just keep buying in. So dollar cost average, if you learn to do that and then you just hold for a long time, that is the best way to profit on these stocks. And I remember you were new at this stuff, so I'm glad you're still sticking around. I'm glad you're still sticking around. Northwest, today's manipulation on AMC GME was insane. Glad you sold half those calls like you said. Oh, good. You did that too? I'm glad. I'm glad you did. I was really glad to see Dave take half off the table. He happened to do it right before the drop too. So, well, he did a little ways before the drop. Could have made a bunch more, but I'm sure he's really happy to have gotten out with half when he did. So, I was unable to get out with mine, gave back some of my gains. But it is what it is. BDN, you did the same thing for bloody Hyliion stocks. Nice. Alex, you'll try that on your next paycheck. Thanks, you actually made me feel a lot better that day. Oh, you're welcome. I'm glad to hear that. I'm sure that was a rough one because, man, you bought in right at the high point. And that was definitely one that I was in on too. So I felt really bad. Felt really bad for for me going in on it and people following me in on it and buying in at the high price. I didn't buy in at the high price, but it always kind of stinks when you catch those things at the top. Northwest, yeah, Dave Haas was the one. He was up 700K. Yep. And I made that suggestion to take half off the table. He did it, and he's in a really great spot right now. So he's really happy about that. That's one of the things that you really need to learn as an investor, and that I need to learn still too, is when do we take profits off the table? It's a good idea to take profits off the table when you can take off half and you get all of your money back, all of what you put into it, your original basis. Sometimes I'll do it. I don't do it often enough, but sometimes if I buy a bunch, I try and buy, like, I might buy 50. That way I can sell 30 of them or 40 of them and get back what I put into it and still have some to sit on and let them ride. So that's one way. That's one reason I like to buy a lot of things. It's hard to do if you have a small account. It's hard to buy enough to make it worthwhile, where it feels like you're going to be happy if you sell part of it and still be able to ride the rest of it. Small accounts, sometimes you're in like one or two positions. You know, you might have 2 options contracts or 1 option contract where you really just have to decide, when can I take the profits? You don't have the opportunity to just sell half. So Northwest, you find the guys that know how to read the charts tend to do better at pulling profits. You really need to learn to read them better. Yeah, that is important. That is important. And it's hard to do in real time because the dominant thing is your emotions and how things feel. You know, you get excited as it's going up, and like you might have a thesis that says it's going to hit a certain target. And so you might miss some of those indicators. You might miss some of that, some of the warning signs that says, hey, you should be taking some profit off of this. That's what happens to me. Like I convince myself that we're going to see a result by a certain date. And sometimes we see even better than that sooner. And I'm like, rather than me taking that as a sign to just cash out early and be happy with it, I readjust and think, oh, where is that going to put us at that date that I was already aiming for? And so by that time, it's already sold off and come back down. Everybody took their profits early, and I missed out because I was too focused on my original thesis, and I don't reassess it in time. So that's something I'm working on. I got to do better. BDN, sell part of the Tesla and buy back. That can sometimes work. It's always hard to time the market that way. So you don't necessarily want to do that if you're in on these stocks long term. Like the absolute best way to profit on these stocks is to just dollar cost average in. Don't worry about selling until years down the road. Because a stock like Tesla, you can expect that it's going to be up significantly in 5 years. All those little dips along the way, you're not going to care if you sold and bought. You're not going to care. It's not going to make that big of a difference in the long run because oftentimes you're going to miss out on some upside. However, if you take those dips as the opportunity to add a few shares, that can make a difference because 5 years from now, it doesn't matter if you bought the high or bought low and sold high multiple times throughout the year. What matters is how many shares do you own in total. And if you own a lot more shares in total 5 years from now, you're going to be pretty happy with the position that's in, I think. So yeah, there is some risk when it comes to trying to time selling and buying on the dips. Selling at the high, buying on the dip. There is some risk to that. Now, you could have a strategy with your overall portfolio, kind of like ARK Invest has, which is really good, where they say Tesla's going to be 10% of our portfolio. If it goes over that, we're going to sell. If it drops, they want to be right at 10%. So if it goes over 10%, and it's on an up day and it spikes up, they may let it ride for a day, but then the next day they're going to sell and they're going to bring it back down to 10%. Because Tesla, at that point is overperforming the rest of their portfolio. So what happens after that? They sell, and then Tesla pulls back, or the other stocks come up. And now Tesla's no longer 10% of their portfolio. It's dropped down. Now it might be 9% or 8% of their portfolio. That means they can buy. And if that's typically going to coincide with Tesla dropping. So Tesla is just going to be in the natural drop. They're going to buy, bring it back up to 10%. And then when Tesla goes up again, oh, look at that. Now it's more than 10% of our portfolio. We're going to sell again. So it doesn't take trying to time the market in that sense. The market is telling you when it's time to sell and when it's time to buy. You just know, or they just know, they want to own Tesla stock for a number of years. And they want it to be 10% of their portfolio all the time. And for a stock like Tesla, that works amazing. Great way to play those. Northwest, you were excited today. At the high, your portfolio was over 30% up. Wow. It was like seeing a shooting star. You were mesmerized and held on too long. Oh no, how did it end up? So you must have had a big, I'm sure you had a big position in GME. So, oh yeah, GME and AMC. Did you get out of any of your AMC positions? So AMC had their earnings report tonight, and apparently they made like 20 million more than expected. I don't think that's going to affect the stock price much because it's already way overvalued. You didn't get out of half of it. Oh no. Bummer. Well, at least you sold half your GME. At least you sold half your GME. So AMC, I don't expect the earnings report. It was a good earnings report, but I don't expect it to affect the stock price one way or the other necessarily. It's going to go up and down based on GameStop and people buying in for that. But I did do a calendar spread, and it's my first calendar spread that I'm trying. So a calendar spread is where you buy, we call it a long call. That's where you buy the call. So we get a long call at a farther out expiration date than we sell a short call. And you do it at the same strike price. So in this case, I have 5 January 2023 call options at the $2 strike price on AMC. $2 or $3 strike price. Those are way up for me. I'm up like 130% on those. It's a $2 strike price. I'm up 130% on those. So I kind of don't want to sell those. So what are my options? I can sell covered calls against them. And I looked at doing that, but I wasn't too thrilled about the price I was going to get for selling the covered call, and I kind of want to be able to let those run if I can. So what I decided to do instead was I did this calendar spread. I have 5 of those calls. So I have 5 of those deep in the money calls. And so what I did instead was I sold the $15 strike for this Friday, 2 days from now. I sold that for $35. And I bought the $15 strike for next week because I think AMC is going to keep climbing. But I don't think it's going to hit $15 by this week. Now, if it does hit and go through the $15 by this week, there's a couple of things I can do. I can roll that call to the next week. Or I can basically exercise my 5 $2 strike price calls and use those to pay off that one. In which case, I still make $1,300 per call because that's the difference between $2 and $15, the ones that I had bought and the ones I sold. And I'll still have those 15 on for next week. So even though I clear out those ones, I'll have those 15s that are going to be worth more. So the way that I ended up doing this is I bought those 15s for 73. So I bought next week's for 73. Sold this week's for 35. My overall cost My overall cost for the calendar spread itself is $50. Okay, that's not right. It wasn't 73. I bought it for 83. I bought it for 83. So my overall cost is $50 for that calendar spread. And that's going to put me in a position where I'm going to be able to sell my deep in the money calls and my other ones are going to make money. So I'm going to be making money in two places. So anyway, that's the calendar spread I got into. Be interesting to see how this plays. Northwest, you're still up just fine, so you're not mad. GME is still up 7% for the day. Your thesis didn't include it running up today. Oh, that's good. The rest of the week and next week is what you're looking forward to. All right. Glad to hear it. Glad to hear it. Deep in the money. How does Palantir look? I have not looked at Palantir. I don't think I've even looked at Palantir this week. So let me take a look at it, and I will give you my thoughts. All right, let's move this up here so I can see my whole chart. All right, let me switch over to here and see if we can see the charts. There we go. All right, so right here we've got Palantir. Looks like it ended the day up a little bit, and aftermarket up a little tiny bit more, even though it looks like it's down. All right, so let's go to the daily chart. Take a quick look. Palantir hit a high of 45. Looks like back in January, end of January. So up until then, really nice up. Looks like heavy volume here. Volume came down as it consolidated. Volume spiked. Price went up. Price came down. Volume came down. Volume has really spiked up here at earnings, but it does not have the corresponding spike in strike price. So that's interesting to note. It looks like we've got support levels right down here around 22. 22.72, so close to 23. We're a little bit above that now. And if we look at on the daily chart, our MACD has not quite turned over. RSI is pointing up, but it's still below 50. And stochastic is pointing up, but it's still below 50 as well. We like to see those pointing up. That could mean good news for tomorrow. That could mean good news for tomorrow. MACD has not turned over, but it looks like it's about to. So it looks like it's about to turn green. So that could happen with a good day tomorrow. Volume is still a lot heavier, so that's good to see. And that could just correspond with a more affordable price and getting more attention since it's spiked up over here. But it is good news to see that, because volume usually predicts price. Volume predicts price. I don't see any real long-term uptrends, at least at this level. Let's go to the weekly chart. So on the weekly, that's kind of a big, we're definitely not on an uptrend. I mean, we kind of are if we tie these two together. So there's just not enough history for that to tell you much of anything. On the weekly chart, though, RSI is above 50, and it's up. But MACD is down. And stochastic is down. So On the weekly, it doesn't seem like this thing is ready to turn around. But on the daily, it looks like it could be going up. Let's go to the 1 minute, or the 1 hour chart. 1 hour, we got MACD is turned over. We got it slightly red. RSI is pointing down, but it is over 50. And stochastic is kind of flat and under 50. So at the 1 hour chart, not really an indication that it's going to be going up immediately where it's at. But you still got some time until the market opens tomorrow. So that could change. Let's go 15 minutes. 15 minutes. So we hit 26 today and ended the day just slightly over where we started. That was a good start to the day, though. Boy. MACD is mostly flat, but it is turned over to the downside. RSI is down, and stochastic is down, and both are under 50. So I wouldn't expect it to go up first thing in the morning. I would expect it to probably go down in the pre-market. But it could still be an update for sure, because that MACD could turn around really easily with where it's at. This could easily turn back up and be over 50. And stochastic could bottom and just turn right back up. So doesn't look too bad on the 15-minute chart. So hopefully that helps. There's a little bit of technical analysis for you. I'm not an expert on technical analysis, but with what little I've learned about it, that's what I can tell you. That's how I read it. What do you guys think? Stock Journey says, still sitting on 500 AMC. All right. You're locking AMC in and throwing away the key. The crazy price swings will probably keep happening until the next quarter. That AMC earnings call was unreal. If you listened real close, you could hear them hinting on Reddit to pump the stock. You had to watch it twice. Oh, wow. I'm going to have to check that out. You think most of the institutions that are buying have separated Cathie Wood from their club? Starting to notice a trend. The more RK is buying of the stock, other institutions are keeping it down. It's a hedge war within the market, and us retail investors are getting caught in the tornado. Yeah, I agree there. I agree. I'll have to check that out. Northwest Pearl says AMC CEO loves Reddit. You're surprised he didn't say he likes the stock. I'm almost positive they want it to squeeze bad. Yeah, well, they know that with the stock price getting squeezed up like that, it's allowed them to pay off $2 billion worth of debt in the last month. That's huge, and that really puts the CEO in a very enviable position. A lot easier to be CEO of a company that's $2 billion less in debt than than the position he was in a year ago, and on the verge of bankruptcy. Mr. B. Garcia, any thoughts on Lithium Americas? Sorry if you're way off topic. You're holding 50 shares of Tesla as well as 200 shares of Lithium Americas, hoping it will pay off in 5 to 10 years. 5 to 10 years would be a good time frame for Lithium Americas. Any of those metals plays that's like a battery play, where it's mining for the metals that are going to be used on batteries, those are going to take some time to pay off. They tend to spike when anything gets talked about, or they make a new deal with a car maker to do batteries, or if there's even a suspicion that, say, Tesla might be talking to them. Those can spike up, but that'll just be fleeting. They'll come back down as soon as people realize, oh, this is it's going to take 5 or 6 years for this mine to get developed and, them to start making money on this thing. So it takes a while. So having a time frame of 5 to 10 years, I think that's a great idea. And I don't know anything about Lithium Americas in general as an individual company, but lithium is in high demand. It is in high demand. So hard to go wrong. If all of the auto manufacturers are going to be shifting to EVs, which they should be, you're going to have a high demand for lithium, high demand for nickel, high demand for silicone, all of those things that make up batteries. And it won't matter. It almost won't matter. I mean, as long as they can run a profitable mine, it's going to make some money. That's really what it's gonna boil down to. So just make sure that they've got good management, that maybe they have experience in mines, and that'll probably pay off. That would be my guess. BDN, if AMC is a good short, buy, sell. Oh, is it a good stock to do buying and selling on the short term? Is that what you're asking? It could be. It could be. I mean, it's up pretty high right now based on valuations, but it's not trading based on valuations. So, yeah, I mean, I'm treating it as a fairly short-term play. When I bought my January 2020 calls, I had no idea that it was going to do what it did. I bought in right before the first spike up, and I was not in a position to take advantage of those gains. I wish I had, but at the time I was doing an income play with it, expecting it to maybe hit $8 in a year. Turns out it hit $18 in a week and a half, and I had calls sold against it. So I ended up making good money. I sold calls for weeks while it came back down, and I'm still in a position to make good money on it. So it's not bad. I'm not in a bad position. But it would have been better if I had been uncovered and I could have just sold it at 18. So it could be a good short-term play, but you got to decide what your risk tolerance is, because you are not trading with a stock that is going up because of any underlying fundamentals. Northwest, you wouldn't short AMC right now, that's playing with fire. Yeah, he wasn't asking about shorting. He wasn't asking about shorting the stock. I know it kind of sounded like it, but I think he just meant a short-term buy and sell. Any other questions out there? Yeah, my AMC calls were covered when I first bought them. When I first bought it, I bought those leaps, and I sold the covered calls like right away. The reason I got into that position was because there was a really juicy premium on those covered calls. And little did I know that was just it was an indication that it was going to shoot up, because that's what it did. I actually got into on that same weekend. It was on the same weekend. I had been studying options, looking at all the stocks out there, and figuring out what options I was going to buy into to turn into a good income stream. And I ended up finding AMC. I found EXPR. I found NAK. Now, what do all three of those things have in common? They all shot up that next week because they were all part of the meme stocks. They were all part of the meme stocks. There was a couple other ones in there too. I don't even remember which ones, but there was like 4 or 5 that I had bought into, expecting to do, SNDL. So there was a whole bunch I bought into, expecting to just make nice premium selling covered calls each week. And lo and behold, they shot up, and I just kept rolling the covered calls. I got decent premium, but I would have made way more money if I didn't cover them, and I was able to just sell out of the options I bought. Stock Journey, what do I think of the tone in the market? You feel like you're the only one seeing this bomb in the market growing. I wouldn't say you're the only one. A lot of people are talking about a bubble. A lot more so a few weeks ago, before tech and growth took a big hit. I think the tone in the market is a lot more subdued now than it was 3 weeks ago. And that's because a lot of profits got taken off the table. A lot of people's portfolios got hit significantly enough that they're questioning how long it's going to continue. There's definitely been a sea change in attitude that's been forced on us over the last few weeks with all the red days. So that's what I see. I mean, that's the tone that I feel in the market right now. People aren't sure if these things are going to keep going up or if they're going to go down, and so they're more hesitant. Whereas prior to that, the feeling was these are just going to keep going up, and people were investing like they were going to keep going up. Now, part of all that dropping caused a lot of people to have to get out of their margin. It hurt a lot of people because a lot of people were using margin. And it also contributed to the sell-off because they got margin called because of that. So we'll see. I mean, people are going to be slowly coming back into it, I think. once they realized that there's not really a whole lot to worry about. I think there were a lot of concerns. As far as the bubble goes, I don't think we're in a bubble. I think what we were seeing is people seeing the stock market as the best option for their cash at the time. And as that adjusts a little bit, as bond markets go up, maybe some other opportunities out there with that big dip in the market, people are realizing, oh, I made a lot of money. I might pull that out and put it in a different place. So I'm not all concentrated in growth stocks in the market. So people are going to diversify. People are going to diversify. That's what my thinking is. I think people aren't going to be quite so concentrated. So it was probably a healthy correction. I mean, they talk about there needing to be healthy, or that corrections are healthy to have from time to time. I think that's what we just had. I think we had a healthy correction. The action from the brokerages was what really caught your attention. Yeah, and that was rough. Kern, I'm talking about you there with the margin calls. Well, you and me both. Totally your fault for being greedy. Yeah, that was. I mean, I don't know if that's just being greedy, but I mean, I got hurt with margin, and that was just I got caught by GME. It was not about being greedy. I was actually just trying to make a nice, safe play, what I thought was a nice, safe play, and it killed me. So. Live and die. You're waiting to see how things go. You'll buy on the next dip, short on the next crazy jumps. There you go. It's a good way to do it. You made 4K on 6 puts for Tesla at 710. Immediately sold at 669. Good for you. That's really good. I have a hard time just buying straight puts. I just lose my butt on them. Every time I buy a put, it just shoots up. So, hey, Tim. How you doing, man? I've been meaning to call you back. I'm in meetings literally all day, every day. So I often forget that I had a message left. But you sold your 5 shares of Tesla at $7.85. All right, when did you buy in at them? What did you buy them for? Yeah, things are going good. Although I still can't access my Legal Shield website. They never did call me back like they said they would. Oh, nice. You got in at 635, sold at 785. Good for you. Good for you. If you ever want to meet up, Tim, and talk about stocks and stuff, and I know you did, I'm putting the link to my Calendly in the chat there. Use that. Get one of my slots. That's the best way to read. That's the best way to get in touch with me. So if you don't get on my schedule that way, we're probably not going to interact. Although I would suggest you join as a YouTube member. You and anyone else who's not a member, you see those names with the pretty green letters and the nice purple badges that look really cool? Those are channel members, YouTube channel members. For as little as $1, you can become a YouTube channel member, and that gets you access into our Discord, where we talk stocks all day long, or at least when I'm not doing a live stream. And it's a great place to find out what people are looking at. People will tell you why they're looking at it. Yeah, it's a great place to interact. I've got videos saved on there that are educational as far as stock options and just stock market in general. So we got a few different channels in there that can be beneficial. But for as little as 99 cents, you too can become a member. And you can do it. You can get access to our Discord by either becoming a YouTube member and getting that pretty green name, or becoming a patron. That's $1 to become a patron. You don't get the pretty green name, but it does support the channel, and it gets you access to the Discord. So I would invite all of you that are on here without that pretty green, without those pretty green letters by your name, join us. There's a link in the description. There's a link in the description below where you can become a patron or join as a YouTube member. If you're on your computer, there's a join button right next to the subscribe button. And if you're on a phone, you need to use the link that's in the description. It'll take you to your browser where you'll find the join button. So really easy. Really easy. Just put it on a credit card. It's well worth the dollar. It's well worth the dollar. Can I talk about my op strategies for options in terms of like picking the stock and determining the best strike price to pick? It really depends. It really depends on what I expect to go on, what I expect to happen this next week. So a lot of the options that I do, I'm doing it for income purposes. When I say income purposes, I mean I'm selling covered calls. And I want to find a good ratio where I can buy the stock or I can buy an option. I buy a call that allows me that I can sell a covered call each week and earn 5 to 10%. I like to make 5 to 10% a week. Like that's my goal when I'm doing income like that. Now, to get to that type of income, you're going to have to find stocks with high volatility. So that's what I look for. I look for high IV. Now, you can go in and you can actually, with some platforms, you can do a search for stocks that have high IV. Thinkorswim allowed me to do that pretty well. Otherwise, what I do is I just go in and I just look at the options prices. Ideally, I like to have stocks that are under $10 for doing that. Because if it's under $10 and it has weekly options that I can sell, and it has enough strike prices, I can usually find something happy in there to sell each week. And you can make a good amount of premium even without giving up your shares. And you just roll it from week to week to week. Now, if it gets to an expensive stock, like Apple, where I'd have to spend 12 grand on buying 100 shares, I would rather buy a deep in the money leap. A call option 2 years out that might only cost me $3,000 instead of $12,000. And I get to control 100 shares. And with those 100 shares, I can sell covered calls against it. It's a little more complicated doing it that way so that you don't get in trouble. But that's one of the things that I like to do. It's a little bit more complicated. Works really good, though. Tesla is not super high IV. Tesla is good IV. But it's not the highest out there. You can get good premium selling Tesla, though. I love selling premium on Tesla. It's just the stock price is so expensive. So I don't own 100 shares of Tesla because it's just too much. It's too much collateral. I do own some leaps on Tesla. So I used to have 100 shares of Tesla that I was selling calls against. I decided to sell those shares and buy 2 leaps. So I could sell 2 covered calls instead of just the 1. That worked out really good. That was a good way to do it. Yes, that's a good point, Live and Die. Tesla's IV is consistently high. And by that, I mean 70 or 80. It's usually right around 70 or 80, which is high. You know, that's normally considered high. You get IVs like GameStop, that's really high, where it's like 400, 500 IV. Those are not sustainable. You will not get it consistently that high. So yeah, you're right. Tesla's IV is high when it comes to the consistency. Yeah, you're welcome, BDN. Well, we're going on an hour now, and I like to run these for about an hour. So if you guys don't have any more questions, I can feel my voice getting a little strained. Been talking all day with folks. So I think we're going to wrap this thing up. Stock Journey says, I think we should make a bet. If AMC reaches 100 or more before December 25th, we take a shot of your liquor of choice on New Year's Eve. How's that a bet? And I don't really have a liquor of choice. I don't really drink. So that's more like just a challenge rather than a bet. It's more like just a challenge or a dare. Something like that. You're welcome, Deep in the Money. Yeah, I'd be surprised if AMC reaches 100 though. So that's yeah, I'm not gonna do my Tesla tequila. I'm not planning on opening that. I still gotta give it away. Still gotta give it away. I've got 2 of them reserved. 2 of them are reserved. So I still got 1 left. That I haven't decided yet what I'm gonna do with it. Still trying to decide. BDN likes Bloody Marys. Yeah, let's just see if it makes it. I like that. Well, I'm going to play you guys out with some music. I appreciate you guys joining me tonight. We're going to be back here every Wednesday for Wealthcare Wednesday. Like I said, if you got any questions, I said this at the beginning of the stream, go to my website, leave a voicemail. It's a great way to interact on here. And let me go back here to viewer questions here. It's a great way for me to be able to play your question, and other people get to hear it. And I turn them into small clips later on, so you get your question gets to live on in perpetuity as long as YouTube's around. So go to my website, ask your questions. I'll play it next week, answer them, and otherwise we'll see you tomorrow morning. We'll be back. Don't forget to join as a channel member, though. Don't forget to join as a channel member. I'd love to see you guys in our Discord, because that's probably where I'm going right after this. I check it regularly, and we interact regularly. So people that have questions get to ask them in the Discord all the time. And it's not just me answering. It's a lot of people. We got a lot of people who do really well in the stock market in there. We've got some people that are really good at technical analysis, too. So highly encourage you to join us. And with that, I will bid you good night.